All right. Hello, everybody, and welcome to another live stream here, of course, on YouTube. Today, we've got a bit of a special show. Of course, we're opening up here for the Tuesday market open, but more importantly, we should have a special guest coming on a little bit later on as we approach more towards the market open. I hope everyone's having a great day. I'm getting pretty pumped. We're only, less than 2 weeks away from actually hitting Vegas now and getting into the US. And obviously, I'd like to meet and hope to meet quite a few of you. So it's going to be awesome. But more importantly, this week, it's inflation numbers. And of course, what does that bring us? Well, hopefully some volatility, quadruple witching, inflation, and then on top of that, Morgan Stanley. What are they doing with their little price upgrades? It really did push Tesla more than I even thought yesterday. We'll talk about that as we go through today's show. So let's discuss US 500. It's coming in weak here, but it is possible we make a new high later on. And we need to talk about the key levels that we have to watch. Let's give a shout out to some people that are joining us. We've got Bull Bear, we've got Stinky Piggy, Smart Money, Tortfee, saying you got the virtual conference ticket. Yes, we do have a live stream of our conference in Vegas available now. We've got some great speakers, so definitely check that out at fxevolution.com. New announcement as of today. We've got Anthony, Zamaro, Stu, Mark, Deb, Martinique, Bradley, everybody else is joining us. Make sure as well, if you do want to push this one up a little bit, do give it a thumbs up. It does help us out. And of course, on a day that we don't always stream on the public here on YouTube, it would be very, very helpful. All right, US 500, let's get into some key levels that we're seeing. First up, we know that 4,500 basically brings the gap fill. Just underneath, that's where the gap is. So that's a gap fill. And then, of course, we have the previous gap fill, which is a little bit lower now. It's down here as of the Friday close. So if we make a new low, let's say we go underneath 44.69, what does that do? Well, I think it starts to say to a day trader anyway, well, maybe we should be looking at weakness for the rest of the session. Strength into weakness would be probably the play at that point. If we come down to this level here, what's a day trader going to do? Probably look towards some type of buy. So anywhere around here is initially going to be a buy. If it takes the low, then it's more weakness later on that you're looking at. So bears will want to clean below 44.69 and not really get an instant rejection, but more of a slow rejection. And of course, the bulls will just want to make new highs. Now, 4,500 is also a key level to watch today. So there's some good levels to be watching. 4,500, 44.69 from both a bull and bear perspective. And if 4,500 is broken above, and as I've said before in the previous stream, 45.40 is reached, or even a 45.20 plus close, that's pretty bullish in my opinion, and some strong stats coming out there. If you watch today's YouTube stream, you would know that there is a really critical level that we're about to achieve. Now, what I mean by that is we were talking about this Friday and the stats that come along with that. And I thought you might like this one here from Almanac Trader over on X. X, it's not even X.com, Twitter/X, whatever. And we saw here that the last kind of 10 of 11 day trades, that is 10 of 11 on the Fridays, were actually down. And of course, we've been rabbiting on about the post-OPEX week. So from a statistics standpoint, if it's going to be bullish, Monday made sense. Even today could make sense from a bullish perspective all the way through to Thursday. Then you would generally look for that price action weakness to start to come through from a statistical standpoint. And it's always important to approach markets from a little bit of a mixture of stats. We use, of course, technical analysis always as our number one, but stats are nice to come along if they make sense to your technical analysis concepts anyway. Never activate a trade purely based on stats alone. It is past revisionist history, so of course it may not work. So everybody's going to be asking the question of, what other zones should we be having on this chart? Some more zones that you should put up are going to do with the SPX gaps. So let's grab those SPX gaps up. And we have some more that we need to be putting on the chart. So we've got here another one that needs to be copied and pasted basically down. And we have it here, which is 44.51. So you should really mark these onto your futures markets, 44.51. Which gives us down here, it looks like. I just want to make sure that's actually correct. I think that might be a little bit wrong. One second, guys. I meant to go to the bullish close. There we go. 44.57. That sounds better. That's the one we were meant to use. What were we doing there? 44.57. Okay. So Uh, the futures kept trading afterwards. That makes sense. So 44.57 is one that I would have on there. I would also have, of course, the lower one and the higher one. I'd put them all onto the US 500. Let's give a quick readout here for a few people that are putting in some good comments here. ZMTN Shadow says, has third week maximum pain really been working since zero DTE? Well, it worked last month. Seems it hasn't been working. It was almost perfection last month. Of course, third week options expiration is the only time we use this, though. It's not, it has really messed with 1 week options expiration max pain. So does it work? Again, it's just it's like, is it there? If the technical analysis would say, let's say, okay, for example, we believe 4,400 is max pain. Let's just say that's what it was. And then you get this. And then you believe it's short and max pain's down here by Friday. Well, it's still going to be smiley face because there is an extra level of, I guess you would say, confidence in that trade. And also that's a confluence story. So if the price action activates it and then you've got that in your favor, well, I wouldn't discount it. That's for sure. Steve says it's interesting. CPI prediction to be 3.6%. Correct. It's going to come in hot. To me, it seems way hot to not raise interest rates again. Well, it's a mixture of seasonality. So remember, it's year on year. So we're always usually getting an increase in inflation around this period of time, I believe. And then it's a mixture of also, maybe we'll get another rate hike. But as you can see at the forward test, it's kind of like this. So if you think about yield at the moment, we can actually look at yield together. So make sure you put these things on the charts. So I haven't updated this particular chart, but usually I've got all the yields in advance. So you can see here that December of 2023 is 5.455%, then March of 2024 is 5.4%. So basically the yield could still be increasing according to the market. Maybe one more rate hikes possible like this, and then a cut that could be coming through. And most people expect the cut somewhere around that March, April of next year. At least that's what the market's kind of pricing it at this point. So yeah, look, it's not really, again, you could be correct. Maybe the Fed does need to put another rate hike in. Maybe it's a good poll question for us to ask here when we're always going through these things. Also, thanks to the almost 500 people that are tuning in on Tuesday. I know we don't usually always stream here on this day, so it's awesome to see you guys. Permit Fisher says, hi, Tom and co. Finally had a chance to catch a show. Great to have you here, Permit Fisher. Always good to see someone that's been supporting the stream for so long. Crypto Puppy says, nothing has changed. The market will rally, will be faded. Inflation will be higher. So the market rally will be faded. Inflation will be higher. Would the market really rally because of no rate hike? Look, again, these speculations about rate hikes and stuff, I don't think it's probably a profitable concept to speculate on that. Instead, what you're better off doing is just saying, okay, what's realistically happening here on markets? It's kind of like on the Friday video when we talked about our weekend and we said, oh, well, unfortunately here, if you were feeling bearish, it looks strong. That's what the small time frame said. At the moment, you could still be quite bearish around this zone here, but if it gets higher than that, you've got to face the reality. And it comes back to when 4,200, if you've been watching the stream for a while, obviously you would know that I was kind of rabbiting on about this level being potential of a short. Once this happened, well, you couldn't do that anymore. And there was nothing. You just had to go with the trend, go single stocks, and that's the best way to do things because it broke out of the coil. And when you get a breakout such as this, you usually get explosive momentum and something that could also be happening on the crypto markets moving forward. So we might even have a quick look at that. Let's look at Bitcoin because it's putting in a pretty strong showing here after taking a new low. So take a look at this. This is the low, 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 then a new low. Now we've got a reversal here, big, strong reversal. And you've got to guess that this is a bunch of shorts that are getting absolutely squeezed out of control. And it's pushing up higher. Now, I think 26,500, as I said, 450, 500 is a critical level. But it's starting to look like if this happens, there literally could be quite strong buying at pretty much around this zone here, 25,768. So at the moment, it's clearly squeezing some shorts that were entered down here. And this is why you say sometimes patience, react, don't predict. In this case, the reaction is obviously a squeeze. If it keeps going up a little bit higher and it says, you know what, I'm ready to go towards the most traded level up here, then we're looking for pullbacks into the long. And that will be key. Some good stocks coming through here today, so that's going to be good. Boris says, hi, Tom. I'm watching a daily review every day. You're doing an amazing job. Thank you for that. No worries, man. Look, I think sometimes we smash it out of the park together. I think sometimes, we get it drastically wrong. There's no shame in sometimes saying that. The key to any trading, and I want to ask you guys this, but this is my opinion on it anyway. Trading is more about sometimes you're going to have edge. Sometimes you're going to recognize an opportunity. That opportunity is going to be a statistical reality for you. And if you did that 100 times and you won 65 of them or 70 of them to a certain ratio, then you're a winner. It doesn't mean that you are. I am better at predicting the market than necessarily some of you out there. I may not be. But what I am decent at is recognizing some opportunities and, of course, replicating those concepts. So there are some days where, why do I cover 20 different pairs on this channel? The main reason I do it is because it's more fun. There's always something to talk about. But more importantly, there is usually one of those things that are giving us replicatable edge. Whereas, sometimes the markets can slow down. They get a bit boring. I mean, look at crypto recently. It's been horrendous. You've been trading crypto, you'd be like, whoa, whoa, whoa. The emotions going through here, but the boredom would be real. I'll just quickly make sure I've got our guest coming on here. It looks like he is going to be coming on shortly, so that's going to be excellent. All right, that's good. Okay, let's answer some more questions here. Adrian says, I think, wait, who bought it? Ryan Hodges got a good question here, and this is about something else. I think NVIDIA is another question. Shout out to Tesla Harry, probably sipping cocktails in the Maldives these days. I don't know about that, actually, Adrian. Remember, Tesla Harry was around when I think Tesla was about $700. Was that right? Before the split. So it wouldn't be up too much. Poor Tesla Harry. You guys drove him away. Why did you do that? Ryan says here, great to see you, Tom. Excellent being here. What do you think about shorting oil XLE as a seasonality swing trade? Yeah, it's a great concept, and you are correct. It does tend to actually go weak. Now, it's kind of ironic, isn't it? Because everyone's bullish on energy. Everyone's looking for breakouts on energy, and they're going into multiples, and they're saying, look, oil's going to $100 a barrel again. Oh, I'm not too sure. Let's actually ask the community. Where do you guys think that oil's going to? Oh, let's chuck a few in here. Let's quickly go through. Poll. Yep, this is for the right one here, so that's good. So we'll start a poll, and we'll say here, where do you think oil price is going? Okay. Now, this is for just US oil, not UK or Brent oil. So we'll go here. This is in 1 month. Okay. No, 2 months. In 2 months. And this is the very important question we need to answer. Are we going to go under 80? We're going to go over 90, over 100, or under 70. All right, there we go. Start poll. Let's find out what everybody else thinks, not what I think. 2 months' time, where is oil? You guys are good at predicting. You tell me where it's going. I don't know. Tom, can you have a look at some stocks for us? Yes, we can. We can go through quite a few here. So energy, we've seen some large transactions here, and that's generally synonymous, or it has been in the past, with sellers. It is at resistance. So, of course, it could also be getting ready for a massive blowout. And that's something you do need to keep in mind. So what are we looking at? Let's go to the smaller time frame here. We just took a little low in the previous session, and that low sits around $90.58. So it's kind of like a critical little level there. If we go down to the 2 hour, you can see here that we have, again, another low, and it's just taken it. It's not super considered. So this is a high, this is a low, this is a higher high. And effectively, the market's kind of been rallying with a series of higher peaks and higher troughs for a while. It's the first little sign of weakness coming off a fairly large candle, that where the rest of the day was going up on a lot of other stocks, guess what was happening to oil? It was getting bashed down. So, yeah, I think we will find out as much as we need to know very soon. I expect it to kind of do this. And that would be probably a sign that, yes, we are going bearish here. Biff Helms. So is the iPhone officially on sale today? I haven't actually seen. What's the countdown for the timer here? Is it going on? Mac rumors. 4 hours, 14 minutes, 10 seconds until iPhone 15. 17 cameras, one USB-C port. And did we tell you that USB-C is revolutionary? No more lightning. No more lightning cables, guys. That's what they're going to claim. They're going to claim they came up with USB-C. You watch them go. They'll be like USB-C charging. What do you guys think? 17 cameras, though. All right, you guys are voting. We're finished with the vote. Over 90 is 54% of you. Wow. Oh, and 1 gram lighter. That's right. Aluminum for all the Americans out there. Aluminum chassis. Okay, so the votes are in. Over 90, 53% of you. Under 80, 22%. Over 100, 16%. This is in 2 months for oil. And under 70, 7%. So good split there. Most of you believe that it'll be over $90 in literally 2 months. So 142 votes, decent cross section. Certainly an interesting one. Thank you for voting in that. What do I think? I'm going to say under 90. Did I even put that as I didn't even think I put that as a vote. Under 80. All right, we'll go with under 80. Why not? Why not? Why can't I say under 80? I will. But peak at 100. I mean, look, the trend's up right now, so I probably shouldn't go against it. But why not? We'll go out there and do some random stuff. Apple cautiously up, not dramatic. Well, considering it is the news of Apple, before we go to Apple and we take a look at the stock, let's take a look at treasuries. These are still getting smashed around. Down, and we'll do Tesla after that. So this is up, down 0.72% treasuries, coming off a little bit of a reversal here after putting in the island, by the way. So this is a gap down, gap up. Can't hold itself, goes a little bit more of a rally during that session, and then just goes straight back down. A lot of stop losses under here. So I can still see them getting wiped. CPI will be very scary for TLT traders because, of course, they're going to be looking at and saying, if we see US 2-year, 10-year, 20-year go to new highs, straight down all the way to $88, $90 for the treasuries, in my opinion, with so much coming out. I still like them here, though, for long term, but yeah, I don't know. I feel like they've got a little bit more down in them. Now, AAPL still underneath the daily 20. You can see here it's coming in at about 0.32% up. So a little bit here. Thoughts on Disney? We'll do that very, very soon for sure. Where do you think Tesla is headed to? Oh, I got to say, I'm pretty surprised that it managed to smash the 265. I don't have skin in the game on this one towards the short because I always wait for the extra little bit of confirmation on the V turn. But yeah, I wanted to short. Oh, I did. I wanted to short it yesterday, and it just didn't give it to me. And I looked at it. I woke up because, of course, for me here in Australia, by the time the market closes in the best market in the world, the US, by the time that closes, it's like ridiculous time in the morning. So I woke up and I was like, oh, what? What the hell? The price is like 270 something. I was like, stupid Morgan Stanley. And then I was like, oh, okay, well, this kind of changes the game for Tesla traders. The bulls can probably get out and start literally waving their flags on me because, I actually feel like it could keep going with such that positive catalyst in terms of the move. Anyway, AAPL is quite weak in terms of underneath the 20. So it's kind of like a similar replay to Tesla. We had the 50 DMA. Now we've got the 20 here for the simple moving average. 2 candles underneath. No close out above it. I don't really think Apple's playing its own. Apple's weak compared to the rest of the market, but I would be actually focusing more on that US 500 levels that we put at the today's start of the video. I feel like that's going to drive a lot more quality in terms of your trade than necessarily just picking an AAPL level. I don't really find much edge at this zone, and that's just my opinion. Let's go to Tesla. Yeah. That's a pretty bullish close for the daily. It gapped way up. Now, Tesla and Google have done this before where they've gone out in these massive rallies. They've suckered people in, and then, of course, they've dumped it straight off. Bears would go wild if we took a low down here. I don't think that's going to happen now based on this candle, but a lot will come back to the weekly. What does everyone in the chat think? What do you think about Tesla? Wollongabba says short Tesla at 285. So that's basically going middle of the gap, by the way, because the gap would be 290. Yeah, I mean, you could, but look, that's a fairly bullish sign. Decent volume. I think it's retail because we saw yesterday there was quite small amount of options trade. So I do think it's retail getting them very excited. And this stock is like no other. If you saw this type of move on an AAPL or a Microsoft or even a Google, I'd feel a little bit better about it. But when it comes to retail traders, we know that everyone out there is bonkers when it comes to Tesla. And it just pushed this through. That's a super bull case. I was talking to a few Tesla bulls the other day, and they were loving everything that was coming right now. The new Model 3, this thing that, of course, Morgan Stanley's been talking about. And then on top of that, we also had a whole bunch of other positive catalysts, the Cybertruck. And can you imagine the hype into the next 6 months? Like, when's the Cybertruck meant to come out? When is this thing? Because I'm sure there is going to be 1,000 million videos coming out with people with sledgehammers trying to smash the window. What do you guys think? That's what I think is going to happen, and it's going to go viral. There'll be people trying to, and if they can't smash the window with the sledgehammer, oh, wow, they're going to sell even more of the truck. That's what's going to happen. OG Gary says, I want the Cybertruck. Yeah. And videos and images says Tesla no trading zone. Yeah, I tend to agree. If you're in a bull, maybe you just keep going. Yeah, that's pretty sweet. I did think, though, we'd stop at around 263, 264. We just didn't see enough sell-off action. The retail herd was very strong, pushing this thing up. Tom says, looks like Tom got his hair cut for the USA trip. Not yet, sir. Not yet. It's long and crazy. That's okay. Is gold moving lower, not looking great? Yeah, so let's take a look here. Gold in one of the weakest periods for it, and it does look terrible. That looks absolutely terrible, Josh, sorry. And yeah, that's a tweezer. That's a rejection that's underneath the 20, and that looks weak. I've got to be real. There is a 0% win rate. I think it's between something like the 5th of September or something like that, and the end of the month, like 30, 60 days later, it's like 0 over the last 10 years or 15 years. So 0% of the time. I should have put this on the YouTube. Maybe I'll get the stat for you. I'll put it on tomorrow's one, okay? It is really bad stat to do with gold. Now, I still like gold stock because gold stock's underpriced to the spot. But yeah, there's a run here that just tends to be horrible for gold. And then it does very, very good usually at the end of the year. So, yeah, I don't like that. I think there'll be shorters all over this area. Once it took that low out, it was probably a pretty decent little day trade. Let's have a look here. Yeah, you can see once it took that, see that low? See the liquidity that was clearly there because it just went boom. And that's just huge contracts just plowing through that one last defended base. And when you see stuff like that, you usually know you've got a fairly decent level that you've been spotting. You should actually pat yourself on the back because what you've found is you've found effectively a critical level where the market has really enjoyed pushing through that with huge options. That means there's probably not that much liquidity behind it. So that's just allowed it to plow through price. And yeah, very significant level. The biography, a Cybertruck, a Dojo, a Highland, etc. See, it's all coming through. The bulls, I can just see it now. Sledgehammers in Cybertrucks and everything else going on. Sol says there are a lot of lawsuits coming for Tesla because of the fake self-driving mode. Look, I can't comment on these. The storyline for Tesla, I cannot comment on. I'm just going to comment on price and say I have one. It's not bad. It's okay. Yeah, I like its simplicity. Yeah, it's not too bad. All right, let's keep going through. We've got a question about Disney. We should have Tyler on pretty soon, I believe. So he's probably about 5 minutes away. So let's talk about some stocks I like right now. 3M. It's like watching paint dry. Kind of like the tape. You know, you just put that tape on your mouth because you're just screaming at how slow it is. I still like 3M and I still think it's a damn good price. Why? From a technical perspective, I feel like it's made a base. This stock has been horrendous, but they turned the corner. Lawsuit over. $6 billion lost, maybe more. But at least it's a catalyst. So, yeah, 3M still on my little bull run, in my opinion. Very, very slow, paint dry watching. Disney, okay. People want to know, is it or have we hit the bottom? Yeah, it's a good question. I don't know. I'd say no because I want it to go under 78, 71 first. But as an investor, you've got to like the level, yeah. I mean, you put this thing out and you go to a weekly and you look at a monthly and you just say, how can the mouse not eventually perform better than it is right now? It was once $200. It is now well over 50% off that price. And that's considerably. Biff Helm says 3M looks to search higher support. Yes. And Oz says, damn, can't watch live today. No, it's all right, man. I'll leave it up for you. For you, Oz. You get it live on demand on YouTube. That's what's happening. Very good. Woolengabba says, I buy Disney in 2 months. I know why you're doing that, Woolengabba. I know what you do now. I know your strategy. I just cracked your strategy. I know exactly what you're doing. And technically he's right. Yeah, it tends to be weak still for a little period of time here. This, I'll give you a little hint. 2023 was always going to be a horrible, horrible, horrible year for Disney. It really hates pre-election years. I mean, it is horrible in pre-election years. I've never seen a graph look so bad consistently in pre-election years, but that's what this stock has been doing. I don't know if it's load though yet. I like 78, 71 as an alert. I'm going to be, if I was an investor, I don't know, I'd be getting itchy fingers. But as a trader, I don't really care. Just wait till it hits the price or nothing else. Intel had another good session on at 1.53%. It's trying to get towards that $40 strike or $39.50. I still think Nike is interesting at these levels. I'm looking for a turn point though for it, so I could see it go lower first. And there are quite a lot of hyper stocks that I think are coming into good prices, but no turns yet for those. So we'll continue to watch those as much as we can. Nvidia as well. Watch out for this. Nvidia here, 448.50. Oh, I don't know. It's looking pretty weak. What do you guys in the chat think? Do you think Nvidia is getting faded here? Do you think people are sick of this one? They're onto the Tesla hype. Retail's like, you know what? Time for Tesla. Time for Tesla. We like Tesla now. We like canopy growth. We like other things. We're not interested in the Nvidia cycle anymore. With all those insiders selling as well, although they always sell. So they're always selling, so it's not really a big bit of information. That I've seen going around a lot on the internet recently. Jonathan, he's the Nat Gas fan. He says, this is the first time Nat Gas has gone through my butt in this direction. I kind of want to take a look at natural gas now, since you don't like it. And you're saying, oh, I'm not sure. Maybe you're liking it here. Oh, look at that. Does that mean that we got yesterday the alert? Not yet. We haven't quite got Boyle off the ground yet. But yeah, Nat Gas is improving. Opinions on PayPal? Ugh. The stock that never stops dipping. That's like that meme. I bought the dip and it just keeps dipping. PayPal 2 hour actually looks pretty good. Not too bad. Not too bad. Yeah, okay. Let's go the weekly. Oh, that's actually a bit of... Why didn't I get my alert for that? It's a bit annoying, isn't it? Yeah, that's not bad. Look, there's a couple of things I like. Firstly, of course, I had that box there anyway. But I do like the wick. That's nice. I do also like the fact that it's found some recovery. Obviously, I still have 64.38 as an alert above. That's why I've got that targeting there. And I kind of like the 2 hour structure. So see how we've got like a gap down here? If that gapped up, I'd say it's relatively bullish. It's, of course, a risk. Like anything, it is a statistical edge, whether you've got it or not. But yeah, the stock does look to be finding some form of base. I have absolutely no idea what this stock is worth. I don't know if it's good value here fundamentally at all. Let's have a quick look here at the news recently. Have we got any upgrades? I do love a good upgrade. PayPal Australia sued. Probably not great. More suing or very big problems. More suing. Not good. Coinbase probing withdrawal issues in Canada. So it's not it's not. There's no sea of greed here. So I would say it sounds like there is not too many catalysts just yet. But once you get them, then you'll go from that level. Permit Fisher, $4.99. Thank you very much. And he says, you think Beam can get its act together now? Genetic resequencing. Genetic resequencing, $23. These biotech stocks are cheap. This is what Kathy Wood loved these stocks very much. Thank you for the $4.99, by the way. Permit, appreciate it. Also, thank you to almost 850 people that are joining us here today. We should be, I'll just quickly check my mail, make sure we've got everything's happening here. Okay, he's responded, so he should be on soon. It'll be good. And yeah, I mean, Beam is cheap. I mean, biotechs, here's the problem. They make no money. They burn cash at a very high rate. And then they require to basically come out with something, then sell that patent or sell that concept for the next version of testing. And that's always been the problem with bios. I actually really like bios at this price. You know, you guys know I love the Druck, Stanley Druckenmiller, and he is a big fan of the bios, it turns out. I've been watching a couple of interviews with him recently. He's been talking about the old AI kind of going into the biotech realm and then becoming like significant, allowing them to get great advances in terms of speed with a lot of this new procedural stuff. But yeah, look, Beam, from a technical perspective, it's totally overshot. It should have already found base around this price here, which is around $30. So it's pretty low. If we go to the daily and we look at the turn, it kind of looks like it's done a V turn and it's been on this nice little rally here. I think maybe 27.17 would be really interesting for it. And then once that happened, maybe see a little bit of a fade and then go into a rally. 32 would be a target, I would say, based on just eyeballing it, 31, 32. So I think this stock could easily get back to that level. Terry McAllister, thank you very much. $2. Appreciate it, Terry. Thank you for the support. William Gabber says, Beam is a hard pass in my action. Has a huge overhang. Has a huge hole in the pocket is what I would say. Canadian $2. Why is the QQQ selling off in the pre-market? Well, look, that's what markets do. They like to sell off after going up with nice rallies. I mean, why was it up yesterday when yields were both up? Today, the 2-year is pressing. So I would say that's a big part of it. 2-year pressing up here at 5.04. All right. Well, we've got our special guest joining us. Thank you very much for this super chat. And we'll get them on right now. Let's hope everything's working. Tyler, have we got you?
Hey, Thomas. Great to see you. How are you doing, my friend?
Great to see you as well. Absolutely. Very good. Thank you very much for joining us here. So, yeah, Tyler, we've got Tyler Wood, everybody, and we're going to basically go through a few things, but I thought I'd ask Tyler straight away here. You know, Tyler, I have to ask you because everyone always asks us the same question. What are your thoughts on the inflation numbers this week and, of course, the US 500's price action? What are your thoughts there?
So, as a technical analyst, I think we're probably equipped with the best tools possible, which is to separate what we think is going to happen, our narrative, from what's actually occurring in the markets. And you know, this entire year, I've heard every macro strategist, a lot of talking heads on financial news, predicting the recession, looking for all the reasons why the stock market could not possibly rally. And in the face of all of that, we've seen equity markets, at least here in the US, pretty strong, pretty constructive. And when I say constructive, obviously we've had an epic rally within the S&P 500, but even things like the Russell 2000, we're even seeing small caps that are building this long-term ascending triangle. We've seen a series of higher lows, even though we're kind of capped at that resistance shelf of 2000. So obviously, we know from intermarket analysis, things like the rising yields or strength in the US dollar have caused headwinds for equities and risk assets broadly over the history. But what we're seeing is that rates are elevated, but they're not running away. We've had this pretty choppy, range-bound activity in Treasury yields, at least on the 10-year, for several months. And I think that stability, both in the U.S. dollar and in sovereign bond yields, has been really constructive. I think investors hate uncertainty, and when we saw the runaway inflation and the runaway rates at the end of 21 and into 2022, that was met with a lot of selling pressure on risk assets. So what I'm seeing here is a Fed that's very careful with their words. I see a lot of financial analysts and news media pundits talking about, they're parsing Jerome Powell's words about whether or not he's planning the next hike. I know markets have priced in the expectation for a hike, not at this meeting, but at the next one. And so certainly we're all reacting perhaps maybe too strongly to each piece of inflation data that comes out. Is it core? Is it more of the soft data that matters? What is the Fed watching? How are they going to make their decision? And the fact is, we have elevated rates. We broke through a 40-year downtrend on the TNX, the 10-year Treasury yield, that started sometime around when you and I were born, Thomas. I think my parents' first home mortgage in 1981 was at 17%. And it's been a steady decline since then, right? If we're looking at quarterly data, we can see a 40-year trend line. That's a secular shift. Now, have we broken above that? Yes. Have we followed through and stayed above that on quarterly data? Yes. But are we right now in the last 6 months in a period of runaway rates? I would argue that we're not, that they might stay elevated and hang around here for quite some time. But that's actually a sign of growth in the economy, right? If you have negative interest rates, you're not looking at a strong economy. And in fact, the entire period of the 1950s, if we look at some historical corollaries in the U.S. stock market, that entire period was met with some volatility, but it was a bull market, and it was all rising rates throughout that entire period. So how's that for a very long-winded answer to the first question?
No. I love long-winded answers, and more importantly, I like well thought out. So for anyone that doesn't know, look, Tyler Wood, you want to tell us a little bit about the CMT organization and obviously what you guys do. But it's I think what you're already seeing there is, Tyler's and everybody from the CMT is incredibly statistical. So they always think about, what's happened in the past, but also bringing it together with practical knowledge. And a lot of that is what we try to do here on the channel as well. We try to bring technical analysis more into an objective, looking down, saying, okay, well, this is the narrative. But as you said, we're in the power position a lot of the time when it comes to technical analysis, aren't we? Because we get to see what price is really doing. And then potentially that's actually allowing us to ignore the narratives. And macro for a long time didn't work. I mean, how long do you think that macro was actually really suffering? Pretty much like a decade plus?
Yeah, exactly. And that's no disparagement of the folks that look at those tools. And I think as trend followers, I would count myself as a trend following investor. There are times when trend following is it's the only game in town. It's the only way that you can indeed beat benchmark indices. But there are also turning points where trend following really gets hacked in the wood chipper. And I think part of what I've learned through the CMT program and through this incredible network, talking with really, really accomplished investors with great track records that have done this through multiple market cycles, is that they stick to their discipline. So I started answering your question, Thomas, without clarifying. It really depends on your time frame. And if you're looking at intraday charts, if you're looking at a 10-minute or a 1-minute or a 30-minute bar, you're definitely going to be looking for different things. And what I'm talking about is a much longer term narrative for the influence of interest rates on equity markets. But certainly intraday, we can see those fluctuations, and the correlations are very, very strong, right? Moves in yields or in currencies can deeply impact how things are trading in the equity space. So on a longer time frame perspective, that's sort of what I'm seeing. That higher for longer. It's not just important to listen to Jerome Powell, but also the other Fed governors who did intimate after the last meeting that if we're just stuck here at 4.5% rates, that's still applying pressure, right? That is cooling the economy just to leave them where they are. And we've also taken a lot of liquidity out of the system, and so I think letting some of that play out through the consumer affairs and through the flow of money, I think they're going to sit tight for a little while, which is I think a very healthy move for the markets generally.
Yeah, so I guess I want to ask you, Tyler, and I think a lot of people maybe will even, if you're up for it, maybe we'll take a question or two from the chat because I'm sure
Sure.
there's a few questions coming through. But the main thing I wanted to ask you was, is there any particular, like, what's your favorite chart right now to be watching, just in general? Is there anything that you're looking at and you're just thinking this is a really interesting chart that might be giving us some type of edge in markets, or
Yeah.
I mean, I always ask people what's their favorite chart because for me, it'd be a question I'd think about for a second, and then I'd go straight to whatever it is. So, yeah, do you have a favorite one at the moment that you're looking at?
So again, coming back to what the CMT Association is
Hmm.
and what it's taught me in terms of responsible technical analysis, I look at a lot of charts, and I have
Hmm.
my weekly checklist, and it goes through cross asset. I want to know what's happening in the commodity space. I want to know what's happening with fixed income, and particularly with sovereign bond yields. I want to know what's happening in the currency space, and then from an equity perspective, I take a top down approach. So I'm looking at a couple of indices, in particular S&P 500 and the Russell 2000. But then I'll get under the hood, right? It's a market of stocks, not a single stock market. So it's
Yeah.
really important to me to see what sector leadership looks like. So
Yes.
employing the concept of relative strength. If
Yep.
we just take the sector ETFs relative to the S&P benchmark, you can see what is outperforming and what's underperforming. And I've got a few heat maps that I use with our own charting service, Go No Go Charts,
Mm.
that just pull out what is trending higher than the benchmark. So on a daily basis, what we have seen over the last several weeks is a little bit of rotation, right? We're still seeing energy work. We are still seeing communications, the sector ETF lead the benchmark index. And within that, you can dive into industry groups, right? So oil exploration and production is doing really well. Coal is doing very well as industry groups within the energy sector, which is leading the S&P 500. So when I say I want to look at the relative strength of the sector makeup, that's a big indication to me about whether investors are positioning
Yep.
defensively or aggressively. And right now we're seeing that rotation, from early in the year, we saw nothing but the growth equity sectors leading: information technology, consumer discretionary, and communications. Then we saw this rotation where cyclical sectors, more economically sensitive areas of the market, like energy, financials, industrials, and materials, all started to outperform. And we've seen some pullback in financials and in industrials, but really keeping an eye on what's happening in the commodity space, particularly as it surrounds oil and how that's affecting the energy sector. But what we haven't seen is investors piling into consumer staples and utilities.
Mm. Yes.
There was a few moments where healthcare was catching the bid, which was great to see more rotation. That's the biggest sector by market cap of the U.S. stock market. But for me, that sort of timbre of where investors are allocating, what's their positioning looking like? If we're seeing a ton of money flow into utilities and consumer staples, that's an intrinsically bearish sign to me. People are getting very defensive. But the fact that we haven't seen small caps destroyed, right? First thing they have to do is stop going down before they can go up. We've seen that take place throughout the first half of this year. So it's not just
Mm.
a safe haven, large cap, defensive names that are leading. We're still seeing lots of pockets of the market in the cyclical sectors, as well as even growth equities still outperforming. So that, and I also keep a very close eye on the XOP, or the Home Builders Index here in the US.
Hmm.
And
Yes.
That to me is more important than any commentary from any Fed governor. All respect to those very fine gentlemen who are poring over data that I don't even have
But
access to.
so did
But
you say which code did you
X
mention then for?
XOP is an ETF, ticker
Yeah.
symbol
So
XOP for
it's
home
X
builders.
like OP like this, isn't it?
Yeah, that's the
Here.
oil in
That's the
productions.
S. Yeah, so it's
Sorry.
XOP just because I wanted to make sure here for everybody. So
Yeah,
would it look like are you going to be able to get that one generally in trading view?
absolutely.
Okay.
Oil and gas production.
Yep. So that's what we've got here. I
Yeah.
just well wait, maybe what I just want to do is take a step back here because a lot of viewers won't really do this relative correlation stuff. So we do a little bit of it. I mean, one of my favorites is XLY versus XLP, which is obviously I call it the American consumer.
Yep. Yep.
Effectively, it shows us whether the American consumer is healthy or sick. So right now, you're looking at this chart and you're thinking, wow, the American consumer looks a lot better than you'd think. I mean, for all of 2022, it was terrible, yeah.
Yeah.
But then it suddenly turned, and especially around January, we started to see a significant pickup in this. And that shows you that around one third, just for everyone to understand, one third of the US economy, which is uh, basically spending,
Mhm.
consumerism,
Yep.
that we are actually seeing a strength recovery. So I
Yeah.
think what Tyler's saying here, and this is just something I wanted to get into for today's show, and I knew you'd say this. So it's relative strength. Now, are you always doing it versus the S&P 500? Or are you like so when you're doing those relatives, are you using the S&P or using an equal weight, or are you using a market weight? Like which one are
The
you
answer is
generally going with?
the answer is yes. You should look at it from every angle possible.
Mhm.
So my chart list is quite long, and I'll go through and look at all of those pieces. But on a relative basis, you could even just compare two different securities, right? So maybe you like in this oil space, right? We've been looking at exploration and production. Maybe you really like large cap Valero, but maybe Canadian Energy Resources is actually outperforming. You can compare where you want to allocate, even at a single security level. The concept of relative strength is really, really simple and therefore very robust, and you can use it in a lot of different ways. But yes, to your question,
Can,
Thomas, when you're looking against the
yep.
benchmark, we could talk all day about the problems and pitfalls of index construction. Like even just the other day, I was talking with some folks about Dow theory, and that the Dow is anything but industrials these days. So you've got to pick a different index because the construction has changed so much. And something like the S&P, which is cap weighted, is going to skew your results. So looking at it on an equal weight basis is really helpful as well. Um,
With
yeah, go ahead.
with the home builders, why do we look at the home builders? So say here, home builders are basically recovering back to their new all time highs potentially.
Mhm.
Why is this the one that we watch? I mean, I understand myself, but tell everybody else out there because
Yeah, of
this
course.
is generally one that's very highly regarded in banks and institutions. You see it mentioned quite a lot in their private reports.
Yeah. So as a leading indicator of how the U.S. economy is going, how consumers are doing, how households are faring, this line should not be going up like that if we are approaching a recession or in a recession.
Yep.
I've read a lot of really great economists who are talking about maybe some changes in what we've seen for yield curve inversion. That maybe that doesn't hold true in the same way post pandemic that it used to.
Yes.
The field of technical analysis gives us truths, which in the financial services industry, being in New York City, there's not a banker on Wall Street that's going to give you the truth on any stock that they're recommending or anything they're bringing to market IPO. What price tells you is what's actually happening. So it's not about what we believe will happen or any kind of narrative or our emotions that get in the way of making sound investment decisions. It's a very responsible approach to say, all right, well, if the U.S. economy is tanking, then home builders and new construction of residential homes should not be rallying. So if it is, then the market is telling you that there is something else going on that perhaps the economists aren't seeing in their data. And that to me is the really powerful aspect of technical analysis, is that we have a very true picture of what's actually happening in real time, and more data than anybody else gets to look at, right? It's more frequent. It's updated real time. It's never restated. It's not an estimate. So price action to me is that's a really powerful tool.
I actually really like home builders, and I think that the way that we look at it is, as you said, it shouldn't be going up if the economy is really bad because they get
Yeah.
really heavily affected. And before the global financial crisis, the reason why I've just been putting this on the chart so that people can see it here is it actually started weakening well before the market started weakening off. It was like a precursor to something very bad. Now, I actually believe, and I've said this a few times, I think the housing is the most important market in the world. Okay, yeah, we all talk about the US 500, etc., but
Hmm.
housing is where all the debt is driven from us. Most of us have mortgages of some type during our
Of
life.
course.
So
Yeah.
when you think about it, the debt engine that's really been building the economy over the last 100 years, especially the US economy since the Great Depression, it's been around a lot around housing. So if we're seeing a failure there in the future, I think it's going to be especially with maybe a yield inversion, which, as you said, is maybe not as big as it once was. There's an argument there.
Hmm.
Then that's going to be a super warning, I believe, and it could happen. Obviously a prediction, but
Yeah.
it is even possible this could happen over this decade. But right now, it's just not showing those signs, is it? So it's a great one for people to have on their chart. And do you
Hmm.
ever use this with a combo of other things, like against the SPX, or just put the SPX on top? How do you generally like to look
Yeah,
at it?
I mean, for me, the relative strength work is really important when I'm thinking about asset allocation. So I'll keep an eye on charts like this, home builders or oil exploration and production on an absolute basis, and then relative to either the sector or the benchmark index. But I really find that just taking a look at the absolute trend and seeing where you've got those major divergences. I love that you brought it back to '08. um, Home
Mm.
builders being a leading indicator of what was a real crack in the system. We're not seeing that kind of divergence right now. And
No, we're not.
divergence isn't just between your price action and an indicator panel, but you can look for divergences on those intermarket relationships as well.
Yeah, and look, Woolengabba here he's got a lot of history in the markets. He says amazes me that the 30-year mortgage rate that XHB is roaring. Yeah,
Mm.
look, I mean, it almost defies logic in some ways, but I think that's just how much juice was in the economy and how much leftover was there that was circling around because, of course, it escaped into the system, especially through stim checks.
Yeah.
And in this case, it's just a amazing recovery. You would have never guessed it considering the situation. If you said a year or two ago, we're going to have 5% rate, I would have said the system would crack. I mean,
Yeah.
that's actually
Yep.
what I would have thought. But the reality is not the same as what my opinion would be. And I think that's where, you mentioned a point before. We follow the charts, we follow the trend. What we've
Hmm.
got to do is we've got to be able to say, look, our opinion is that maybe the market should be going down. That's the information we're fed. But the
Hmm.
reality is pretty much around this point here, which
Hmm.
funnily enough was August of last year, the
Hmm.
market was telling us an incredibly different story. And this is effectively a bit of a turn. So as it went down there, it was kind of saying, you know what, we're probably bottomed off.
And that's the hard part of technical
Mm,
analysis, right,
very
Thomas?
difficult. Yeah.
It's we we all have our belief systems or what we think we know about how markets should behave, right? I thought gold was going to go to the moon, right? To use the phrase of the Diamond Hands maximalists, because that's what every textbook in my MBA program taught me was that that's the flight to safety. When things get really hairy, people pile into gold, and it just hasn't materialized. So something else is happening, and it's often in hindsight that we learn the why. But as technical analysts, the hard part is to accept what the market is telling you in real time and to act
Mhm.
responsibly with that very truthful information. So there's some great analysts. Dan Wontrobsky is a director of research, a fellow CMT charter holder who does a lot of demographic studies. There's a gentleman, fund manager in Atlanta named Chris Chiavacco, who's done a lot of this study as well, and Yale professor Vikram Mancharamani. And all three of these fellows have pointed to the fact that demographics have a much bigger impact on what's happening in the economy than any given rate or monetary policy or fiscal policy that our politicians come up with. So, what they're telling us is that despite the pandemic, despite the rise in rates, we've got a millennial generation that is coming into their home building and home formation, sorry, family formation phase of life. And it's the largest crop of young people that this country has seen since the 1950s. So if you've got all of that need, right, at a generational level, all of these folks are entering their family formation phase. They're making babies, they're buying homes, they're moving out of the suburbs, they're going to stop drinking with their mates at the bar in the city every single day, and that's accelerated by the pandemic, which meant you could work remotely. There's been a major change in lifestyle, at least in this country, but I believe worldwide, where home building is catching the bid because everybody is looking to change their lifestyle in that way.
Yeah,
And I
yeah.
think that demographics, it's not something that I have enough time or have studied thoroughly, but you can read the works of some of these great analysts that explain some of the why. So what I think we can rely on as technical analysts, I mean, I don't know the first thing about how to make a semiconductor, but I can, as an investor, still participate in trends. I don't know anything about, uh, bond yields in Argentina, but I can see the chart and I can see where runaway inflation is affecting some of the Latin American markets. So my point being, with this set of tools and looking at price action, you can be an informed investor on markets that you have no insider knowledge to or don't even understand the why, but you can still be on the right side of trends.
Yeah, some really important points there for everyone to break down. But really, especially consider that the all the way back there we were talking about relative strength. I cannot tell you how big a change that made for me as in terms of positioning, and it was a really powerful concept as well as positioning for more investing. I found that if you could see that all the defensives we talk about on the Daily Show all the time, I say like if we see maybe 2-3 days of strength coming out of healthcare, utilities, and staples, generally that's meaning there's some type of weird rotation. If we're seeing like kind of what we call a dead cat bounce, maybe in technical terms,
Sure.
then at the same time that's usually saying, well, we need to really look to fade this move.
Mhm.
Whereas what we've had so far in 2023 has been only a couple of resurgences of those defensive sectors. It's been almost the whole time weakness against the S&P.
Yep.
Not to be understated, guys, everyone that's out there that's listening to it. Now, semiconductors, we're about to enter into here the market. We'll look at the US 500 points, if that's okay, Tyler, in just a few moments, and then keep going. But semiconductors are posting some very interesting charts. Do you have any insight into the semiconductor chart at this stage? Do you think it's still strong, or what are your thoughts?
For me, it comes down to trend following rules. So
Yep.
I have my own trend following models that are built off of the same stuff that all of us are looking at: moving averages, end period momentum. When those factors are broken, then I'm
Yep.
out. But
Did
but
you
what
want
I
to
would
show? I mean, I can allow you to show your screen. Did you want to show something to
uh,
anybody here? Do you have anything
you
prepped
know
or?
what? I'm going to
Yep.
go through it in detail when we're together in
Oh,
Las
okay.
Vegas.
I thought I was going to get a sneak preview, guys. I was
Uh,
trying.
but conceptually, right,
Yeah.
what we all as investors have to do is decide what our rules are and then stick to those rules. So for me, on a longer term basis, semiconductors are in this sweet spot of what would look like a trend continuation pattern. So we've made massive rallies. We're consolidating some of those gains, and then I'll look to see momentum resurge in the direction of the underlying trend, see us break higher in order to stick with the trend. But of course, if my checklist, if my rules tell me that that trend has ended, then I'm out. So I try not to. It's very difficult, right, to not predict the future of what you think will happen, and particularly when you've had a really strong run,
Yeah.
I find that it's almost just as difficult to stick with something that's working, right? You've made a 20% move to the upside. You want to lock in those gains and you want to close out that
Yeah. Oh,
position,
yeah. That's a big
right?
issue for.
But what if
Especially, that's why I say separate the accounts. Like if you have
yeah,
a trading account, an investing account, we just opened. So we'll look at the US 500 in just a few moments, guys.
yeah,
Yeah, but if you have like an opening account, like something that basically goes, okay, it's going bullish, and then you're so used to trading and you close it, I say put your investments on kryptonite. I want to put those things
yeah.
away in the
Keep
vault
them on
and do
ice.
not look at them. I don't even know what's going on in that account sometimes, man. I don't know. I just don't even know what's in there. But
Yeah,
no, I do. I know what's in there because I do it once a quarter. I rebalance. But
there
the
you
point
go.
is that I don't look at it for quarter. That's for
It,
sure.
you
And I've
have to
never
take your
seen it to be
hands
good. Yeah.
off the controls at times. And Thomas, I hate to do this. I actually have to jump to a 9:30 meeting,
Oh, he's leaving
I
us already.
but
So
this was
Tyler, just before, because we've
yeah,
got the market open,
yeah,
do you want to just quickly tell people here though what the CMT organization does, and a
absolutely.
little bit about maybe how to follow you guys as well on some of the medias?
Absolutely. So, CMT Association is a 50-year-old nonprofit credentialing and advocacy body. So, we exist to help educate and to have a mark of distinction for professional technical analysts worldwide. CMTassociation.org is the organization's website. I've been here for 13 years and worked with some of my legends. So Phil Roth and Ralph Acampora and Louise Yamada and David Lundgren and Bill Kelleher and a lot of great money managers. We just celebrated our 50th anniversary with a great conference in New York City at the end of April. The CMT program, which is where a lot of folks sort of start their relationship. It's usually a lifetime journey of continuous learning. We emphasize a lot of that with member services like a monthly magazine and podcast, weekly webinars. We host events all around the world all the time. And then we also have a double blind, peer reviewed academic journal that comes out a couple times a year, frequent, regular market insights that we post. If you're on TradingView, you can follow us there, CMT Association. But there's a lot of free resources on our website. And the CMT program is a very rigorous academic course of study. It's 3 levels of exam. They're offered twice a year in June and December. And for all of our candidates worldwide, there are a little over 10,000 of them studying for these exams. I want to wish all of you every success as you approach the exams in December. And for those of you who are watching that are thinking about a career in financial services, or maybe you're a veteran portfolio manager that just wants to improve the tools and the discipline that you use for your investment selection, I think the CMT program could be a real eye-opening exercise. It was for me. I certainly understood a lot about technical analysis, or I thought I did, and then I really dug into the program, and there were topics and subject matter that were brand new to me. This is a very
Oh yeah.
broad course of study, and it
There's
was
some weird
fascinating.
stuff out there that I didn't even know about.
Yeah,
Some of this stuff.
yeah.
Oh man, yeah, but that's
So
good.
yeah,
Can they follow? Can everyone follow you somewhere as well? I saw you were on Twitter and a few
absolutely.
other things,
Feel
or
free
X,
to
whatever it's called.
connect with me on LinkedIn, Tyler Wood,
Yep.
CMT.
Oh yes.
I
Yep.
am on Twitter. My handle is T-Bone Pickens, because who doesn't love an oil man when markets are doing this? But then you can also follow at CMT Association on all of the same social media accounts. But I'm looking forward to seeing you, Thomas, in just a couple of
Yep.
weeks at
Yes.
the Win. We'll talk a lot about
That's
trend
right.
following and investment
Yeah.
practice.
Well, I'm very interested to see, of course, how we're going to break all that down. If anyone that's interested, we do have, of course, virtual tickets as well for the event. We've got Tyler and many other excellent speakers coming, so you can check them out over at fxevolution.com, as you guys know. And then, yeah, we'll be live streaming it as well. I'll be setting it up. Don't worry, it'll be professional. Very good, guys. All right. Thank you very much. Thank you,
Awesome, Thomas.
Tyler. We'll let you go and we'll get into this market as it opens up here because we just hit a bit of a little support. So we'll see how we go.
Excellent. I'll talk to you
All
soon,
right.
Thomas.
Thank
Cheers.
you. All right. See you, Tyler.
Bye-bye.
All right. So, guys, we'll get back into this chart here for a moment because, of course, I think I do need to answer a super chat that someone put through for Datadog, the D Dog, and we'll check that out in a moment. But yeah, it looks like we initially bounced off. We didn't take a new low here. So remember, 44.69. You got to give me a little bit of credit. We got within 1 point. Yeah. Well, how much was it? 44.70. Yeah. So 44.70, we end up getting a little bounce. Let's have a look at the small chart. Sorry, we weren't able to take a look at that there. Yeah, from Tyler's discussion point, just I'm not on 3 months. Why am I on 3 months? 3 minutes is what I want. I do not take it lightly looking at those comparatives. I would suggest at the end of today's session, if you can, start loading up all the major sectors, put them crossed with the SPX. Of course, XLY, XLP is one of my favorites. So that's the consumer discretionary one. But also, yeah, home builders highly used by some of the big guys. I see it all the time when I'm looking at any private reports that come through. They always mention it. So US 500 is putting in a bit of a rally here. And of course, NASDAQ's still a bit soft. It's being sold off mostly across the board, except for AAPL with their 17 iPhone cameras. But here it is. And there's the resistance that we're looking at. So effectively, we are just tapping into that supply or resistance pretty much immediately here into the open. And if we do end up taking a new low underneath 44.69, that's critical now because you've already seen it react once. So you got one reaction, two reactions. So yeah, critical zone. Now, my opinion on semis is obviously, yes, okay, we still do have a bullish trend intact in terms of we haven't been doing anything, but we also haven't taken it out yet. So, the way I look at this is if you're long, I probably wouldn't be terrified yet because it's the best sector in the market. But what I would also say is that this could be what we call a Wyckoff topping. Obviously, a lot of people are going to see this as a head and shoulders event. But yeah, the key level here, I've mentioned it many times for us, is somewhere around that 143 kind of zone. So 143 is going to be super, super critical there for semis, and do watch that. So markets opened up negative. They've gone positive again. For bulls, you're just looking at that little supply up here. So around that, 44.83 to be broken above, then probably a little bit of a drop later on the session into some form of recovery. That would be a relatively okay kind of scalp concept if you were looking at it. Of course, you proceed with your own risks. NASDAQ is still, as I said, soft. Let's take a look at that on a 2-hour chart. Okay. So weakness here. I'm not too sure if I like the overall NASDAQ. I don't really think it's done anything particularly strong. That weakness was nice initially, but I think the US 500 is the much better chart. And I really mean like way better chart. Oil's up 1.52%, so that's pretty key. Then we've got Tesla down 1.4, giving up some of that 10% gain. I still think we need to look at yields, even though I don't really care about, how to interpret the data. I just care if the yields go into the unknown. 5.1%, if they come up here, the fear of the unknown always freaks markets out. So that's what we are looking at in the inflation number tomorrow. Do remember, guys, the inflation number comes out 1 hour before the market opens. I kind of almost want to stream it. I will be for the private group, I guess. We'll see what we can do. But 0.6% expected. So don't expect a number that is going to be low like 0.2 again. It is going to be an increase in inflation. The market already has predicted that. I don't really know if it comes in at 1%. It could theoretically still go up. So I don't know. Even if it comes in at 2%, it could still go up. We can't really predict necessarily with the data or coming out which way the market will initially go, because it might go off in the false direction first and then grab liquidity. So remember to react and not predict there. Another thing that Tyler mentioned before, which is really important, follow your damn rules and don't predict too much if you can help yourself. That will be your greatest technical strength. And I think that's an excellent concept to use there. Torpy says euro and pound looks so good. All right, man, let's have a look. So you're talking about euro, US dollar, I assume. Let's just check it out. Check out these currencies. They look so good, he says. Okay. Oh, yeah, I see what you're saying. You're trying to get a short off them. So basically, they took a high previously, and then they've taken out that low. Trend is overall still down. They've really got smashed there. I do expect a recovery around this point here for something like a euro, but then you're basically saying, I think, something like that with maybe a 1074 short. I'm sure pound looks kind of similar. Let's have a look at the dollar index. Oh, I mean, these are turn points for the dollar index as well. This is exactly where I expected it to get to. Just weakness into strength into weakness potentially. This is around where the bears should show themselves if they're going to. And then now we've got a 50-50 situation. So we've got a short that could come in through here. Then we've got a long that could come in around 1046, which would be equal to that euro trade. And then effectively, if that came in, then you'd go to a new high and you'd puncture this and keep going to the next level. And that would be, a squeeze of epic proportions. It's one of those ones where I actually take usually two styles of trade. And the reason I do that is because I'm pretty sure one of them will move in a big way ahead of inflation and into inflation. So in general, I might actually be long. Sounds mad, yeah. Has anyone ever done this in the chat actually, where you've been short a trade and then you've taken a long trade on the same pair, and you kind of know based on these setups before that one of them is going to pay out well over a 2-to-1. So therefore, it's going to you're either going to get a break even on one side and a long that's going to get you a 2-to-1 or 3-to-1, and therefore you're going to be still profitable. Anyone ever done that before? I've done it quite a lot when you see these things. Into CPI, I see subdued ranges, to be honest. Generally, we would usually be pretty flat there. Let's take a look at DDOG and bring up DDOG here. So that's Datadog. And you can see that we've got an interesting chart. Nice level, actually. Unfortunate that it wasn't able to get higher than that 122, which we had previously for the key zone. I do like the stock. I think it's pretty sweet. It's not exactly cheap, though. It's already been expensive for a while due to what they do. It's hugging that 20 moving average on the weekly. You've got that nice, that bad earnings, good earnings that technically got smashed off. So you've got a decent recovery after that. I'm not sure if I wouldn't probably do anything with DDOG here. I like the base as an investor, but I wouldn't really trade it at that point. Smart Money TV. DDOG, I thought it was UpDog. Very good. Does anyone here believe the BRICS will destroy the dollar sometime soon? No, not soon. I think it's very, very difficult to destroy a major. And that it'd take a long time, 15 years. Lithium still cooling? Yeah, I hadn't looked at lithium stocks in a while here. Straddle, yeah, you could do that. Definitely. Yep, straddle. Yep, all the time. I love that. I'm pretty well 100% directional, to be honest. Fair enough. And yeah, I mean, it seems like a lot of you have taken similar style trades each way. Yeah, it's pretty good. Thank you very much, Permit. Appreciate that. And Tom, you look so awake when it's like 2 a.m. over there. No, not right now, David. Believe me, when it's 2 a.m., I cry about the opens. It's bad, dude. It's very, very bad. It gets horrendous when it opens up at 1:30 in the morning. But no, at the moment it's only 11:43 p.m. It's still early. It's all good. Talf Tazy, we'll just answer a couple other questions here because you guys obviously stayed around for the open. So let's just check that US 500 and see whether it's gone through that high. Probably should have set an alert. Be easier. Not quite yet. Still on the resistance. We'll watch this one here. All right. So the question is, let me set an alert. Let's chuck one in there. There we go. All right. Airbnb seems to have a lot of interest. I don't know why you guys like it so much. I know it's been rallying and stuff, but yeah. I guess the base is pretty sweet. That's a great level. And this was a sick level. I like that 106 so much. So Airbnb, well, it's finding its little rally. It's done its little kind of gap up here, 20 moving average. What was the question about for this? What's going on with BX and Airbnb? Pump, fake, trap. These are very sensitive to rates. Yeah, you'd think it's worse, but I don't know. It's kind of like that whole home builders thing. You're right to look at demographics there, but it's kind of going against what you would obviously think should be sensitive to rates. We don't even have the history, though. It really should be the consumer discretionary, though, should be weakening as well, because you would think the American consumer should be weakening. Well, based on XLY, XLP, which is not my opinions, not your opinions, not any of our opinions, really, it keeps going up. So how can we do that? We have to just follow the trend in that case. You know, sometimes I say this, if the news is horrendous, of course, Warren Buffett would say buy fear, etc. But if the news is coming out bad and the price action is doing something differently, it's generally going to put a monster squeeze on. And that's just because it's actually the news that we're being drip fed is so negative, so bad, and just in general kind of confusing our brains that we can't comprehend that this is the new reality. And that's why it's good to have those long short style concepts here. What do you think about SMH or SOX? We took a look at it before. Look, I've seen some large trades over the SOX and semiconductors index, but still it keeps hugging the 20 moving average. You can see here for SOX, hugs that 20 moving average or mean reversion. If we go to the daily, it hasn't taken a new low yet. So, what you're seeing here is at the potential if we get like a super CPI number for a new run, which of course would be island reversal, holds itself and goes. I don't like the way it's distributing, in my opinion. And I do think that some stocks such as AVGO, etc., are showing weakness over the next 3 months. But yeah, I'm not too sure there. McCredit Union 1 says, can subscribers join your conference remotely? Yes, I'll be streaming it. Yes, I bought the super fast internet, guys. So we will be streaming it. fxevolution.com. You can watch it live, and then you can get a copy of the recording as well. All you need to do is just jump over there onto the website, and it's now available, which is pretty sweet. Look, it's going to be super good, man. We got an ex-Goldman guy talking about options. I'm going to pick his brain. I'm going to feed him some very delicious food, and then we'll see whether we can get some good information. And then who knows? I might even be able to share some of that with you guys. We'll see what he has to say. Tesla is rallying. Yeah, Tesla is flat. So yeah, back about 1.5% from where it opened. Eric says 99% living the dream. What do you mean by that, Eric? I need to know more. Tell us. Killer stream as usual, mate. Killer Manzilla. Thank you very much. What's your view on inflation data? It'll be higher than we saw last month, and I don't know how to interpret it. And I'm going to hopefully see a liquidity steal. What I'd like to see is the market kind of goes off. Especially, imagine if it was really hot, like a 3.8% or 4%. Let's just say that comes in like that, and then it goes off bullish, and we see a replicatable setup. That'd be sweet. But yeah, how can I predict it? I think I'd be stupid to say, oh, I know what's going to do. I don't quite yet. But when I do, I'll have a statistical edge, I believe. Do you normally just trade equities or your options trader? I generally like options more than equities, but I do tend to be a boring person and sell credit. I'll be real. The credit selling is like selling insurance in some ways. It's a beautiful thing. And I think probably a lot of you, has anyone else here, as you go through your journey, often in trading, you'll start off in, there's always the same thing. You'll buy your Apple, you'll buy your Tesla, you'll buy your Microsoft, you'll hold it, and you'll be like, this is pretty good. And it goes up, and you think, damn, so easy. Then you go and trade some weird stuff. Yeah, it gets a bit crazy, a bit dangerous. And then you start into the mid caps. Then maybe you make some more money. That could be a bit more dangerous. Then you get into weird, demented, terrible stocks that you shouldn't be trading, and you lose some money, but you're hooked. Okay, you're in. You're in the deep world. And then I know what you're going to do. You're going to start finding out about futures. Yeah, we're going to go into some leverage. So then you generally go leverage, and then from the leverage market, you start to go into like 3X. What I mean by that is like 3X funds, like TQQQ, SQQQ. You guys know what you did. I did it too, so I know. I went through this thing. Then you go CFDs, so futures and CFD contracts, and you end up a lot of the time in options, and you'll start by just buying calls, buying puts. Then you'll go into exotic strategy, and then if you're lucky enough, you'll go into crediting. That's just my opinion, okay? I'm not sure. Has anyone ever gone through the journey that way? I mean, I have. Has anyone else ever gone through the journey that way? It's got to be like what 90% of us do. That's why I did it 14 years ago, 15 years ago, whatever the hell it was. Always says, you're literally describing my life right now. WTF. Yeah, man. Prime says, absolutely. Yes. It sounds exactly yes. I know. Stuck with CFDs. Interesting. You haven't just made it to the next. Don't worry. You're coming. I can see you right now. 2 years credit I can see it right now in your eyes. Yeah, but I stuck to options now. Yeah, that's where actually the end. The end is usually in options, and then yeah, there's not really. That's where most people end up. The good thing with options, especially if you get in the credit games, you can stay around for a very long time. Brian's actually let's go through here. I just think it's a super cool. Let's have some fun. I want to see what you guys have gone through. Give me your history of what you did. So Brian says stocks into ETFs, very cool. Then into 3 times ETFs, which is pretty much what I said, and then to options. So yeah, that's the standard go-to in America. For Australians, it would be stocks into ETFs, into CFDs, into options. John W says, I skipped futures and went back to trading stocks. So much safer. Yeah. There is the full circle. There's the full circle that goes back into the single stocks again. Yeah, it's funny. All right. Well, look, we're down here in a sea of red across most of the board. I'm going to have to load this up because I'm interested to know what sectors are doing best today. So I'm going to cheat and use CoiFin just to have a look for today. And that's because I'm feeling a little lazy here, guys. So we're going to load up the CoiFin. I'll bring it on. So energy is the best sector, which makes sense. It sold off very aggressively yesterday. Clean energy is second. Metals third. So they're all inflation-based plays. Let's watch some squiggly lines. I'll put the squiggly lines here. And then defensives, unfortunately, down the bottom. So not really marking a super negative day for most people. Thanks very much, Goofball. Yeah, look, we'll get on the stream. I'm actually going to hopefully have a little bit of a office switch in the future. Let's just say that, and hopefully it'll look sweet. I'm gonna upgrade a few things and change the stream a fair bit as well. Stocks to options to nat gas. You like to live dangerously, I see there. To Nasdaq futures, it looks like not good for my mental health. Well, no, I think the nat gas component was probably the worst one. I guess you're saying stocks over options over nat gas, but nat gas is the widow maker, man. You shouldn't have been doing that. Disney bounce up 2, yeah. Look, well, close. Like it above this high here, close. It's getting there. I'd still say it fades after this, but yeah, that's the beginning of a little V there for Disney. We'll watch that one. I'll tell you what, I'll put it in the show at the end of the day. Thank you so much for everybody that has been following us. And then I hope you enjoyed that little bit of an interview. Hope you got something value out of it. Home builders, XLY versus XLP. And of course, make sure to do your relative strength versus other pairs. It is super good. And once you start to understand it that way, you're going to become like a macro genius in your own mind anyway, because you'll actually see what the market's telling you. And then you can marry that up with some of the results that are coming out and see how the market trades. It's also good to have like a theory or a concept of how you recognize daily and weekly change of trend. I would have suggested that's another thing that I'd be looking at quite closely. If you are interested, remember there is a live stream event for our Vegas conference. We've got Tyler, we've got ex-Goldman guy, we've got a whole bunch of other CMTs that are professionals at their own areas, which is going to be awesome. I'll be doing a speech about stuff that you haven't really seen me talk about before as well. So jump on over to fxevolution.com if you want to. There's still some tickets available for the actual event itself. And of course, there's a giveaway as well, which is somewhere in the links down below. Thank you very much for joining us here for Tuesday Market Open. It looks like we still haven't got our alert on the US 500 in terms of a new high. So it's possible the market still want to short off. Key critical level here is still sitting at around 44.83. So, yeah, interesting. 44.69, 44.83, and we're stuck in the middle end CPI. Who would have guessed that that's where we are? Thank you to each and every one of you. Smash the like button if you enjoyed. Watch it back if you like to. And we will see you at the end of the day for another close. I'll try to get it out earlier today as well. I know that was a brutal session, but tomorrow will be much better. Thank you, and bye for now. See everybody.